Okay, I can start. Thanks for joining me today. I'm going to start off with the stock markets. I will get onto the Forex markets because I know most of you do follow them, but I think there's some important stuff going on in the stock markets, and I think it's my job to let you know my thoughts. So we'll start off with the S&P. I've got a chart of the cash S&P market, SPX, in front of me. This is the monthly chart that you're looking at the moment. And I'm going to start by just showing you a couple of little early warning signals here. In the month of July, we had that sell-off where we made a new all-time high and then closed lower. That was a little early warning signal. Of course, that was followed in August by a nice big spike up, so that pretty much killed that negative candle there. But again, we've got the same sort of thing in September where we made a new all-time high, but we closed lower. And I think these two candles are just a little warning to make you pay attention to the fact that this uptrend may be coming a little bit exhausted, and it's certainly been a good one. And you can see back in March 2009 was when it started, and the last few years, the last 2 to 3 years has been, well, it's just been pretty much one straight line. So we're all aware of that, of course. And but I do think it's coming to an end, and I shall show you why. So that's the first thing we've got to note on the weekly chart, how things are getting a little bit overcooked. Sorry, the monthly chart, where we've got a couple of little warning signals. And the weekly chart here, I'll put it on the daily chart in a minute because this isn't too clear, but you can see how these trend lines go back quite a long way, back to 2012, these two black trend lines, and you can see how this was broken last week in the first week of October. So the trend line going back to 2012, so that's, say, a good couple of years. That's been broken. We've already broken the 2-year uptrend here. So that's another warning sign. And we're holding below there. So I do think that this is yet another important development in this S&P stock market. And I think we will continue to hold below here. If I switch over to the daily chart now, you'll start to see something even more worrying. I think we're now starting to build, or I think there's a good chance we're going to start to build a head and shoulders pattern now. To add to these negative signals that we're getting. I can just draw a neckline here, try and make it more clear. You can see I think that this left shoulder has been built over 2 months through June and July. That sell-off into the beginning of the August created the first part of the potential neckline. Then we rallied up, we made a head pattern over through September, and then the decline through late September and into the beginning of October, I think could be setting us up for a right shoulder. So it would be nice and simple if we just spent October building this right shoulder, which would be relatively symmetrical, and then plunged through this neckline. It's never that simple. It's never completely symmetrical. It's never a textbook situation. But I think that's something we've really got to look out for. We're oversold on the daily chart now, so I think we can recover. We hit very good support down here. If you follow my reports on the E-mini S&P, the 19, 20, 18 area was massive support, and I actually called a low there. And luckily for me, it bottomed exactly there, and I think that's going to hold throughout, well, for the next 2 to 3 weeks at least. I'm concerned that this might be a very short shoulder. It may only get through halfway through October, and then we will plunge. Timing, I don't know. It's impossible to know how long it'll take to build this right shoulder. But I do think that is more than likely what's going to happen. If I'm wrong, and we start to get significantly above this 1991 shoulder in the cash, at least. I'm looking at the cash market now. If we start getting up through 2000, well, yes, we'll probably retest all-time highs. We'll try to go for these all-time highs around the 2019 area. We'll head up towards them. You can still get lopsided head and shoulders patterns. You could still get one up into the low 2000 area and then down. So anyway, I'm speculating here. This is what I think is going to happen. And we'll find out if I'm right, I suppose, over the month of October. Just to back that up, we'll have a look at some other stock markets. The Russell, I'm back to the futures here, the Russell 2000, that's the daily chart, which I'll come back to actually. These longer term charts are what really matter at the moment. And this is even more worrying. It's not even it's not even a textbook pattern really, but you have got a double top here. I think that's pretty clear. We had a high in March of just over 12.12. We had a high in July of just under 12.11. So that's a pretty clear double top pattern, which has been building up throughout the whole of this year so far. And I think you could also say that it almost combines into a head and shoulders with a double top pattern in the middle of it. I don't think that is actually a recognised pattern. I think that's one I've just made up. But I do think that is still very negative, and it does show that we are starting to develop into a bear trend. Last week we did hold, just about hold, where we tested this year's lows, which for the futures were around the 1078, 1077 area, 1078 area. I did think that would hold actually. I think we just got a little bit ahead of ourselves. I thought we got a little bit oversold, and I thought we could get a little bounce back. So fortunately that has held, although we are heading back towards that area now, and I just don't think it's going to be too long before that trend line here breaks and we start getting through the 1075, 1070 area. All hell could break loose. I really think this is going to get nasty. You've got to bear in mind this is a big topping pattern. It's been building up over the last 9 months, and it's everyone's looking at it. I don't think it will end well for this index. So there again, we're going to get some small pressure. Who knows? The Russell, the small caps could actually be the trigger. Certainly possible. Daily chart doesn't really expand much on that, other than the fact that you can see that we're starting a very clear downtrend since July. This last 2 months has been developing into a nice bear trend. So yeah, I am looking for a break below 1075, 1070 sooner rather than later, and I think it's going to trigger all sorts of stops and chaos. I really don't like this at all. I'm going to have a look at some other stock markets. Dow Jones. When we get onto Europe, well, you already know that Europe's weak, but the patterns there are not good at all. So this is the Dow Jones, not quite so negative as the S&P really, but again, this could easily be a head and shoulders pattern being built here. It's a bit clearer on the this is the weekly chart I'm looking at now. A bit clearer on the daily chart, which I'll show you in a minute. But you can see this trend line that has taken all year to form. It's where I've got my cursor now, from the low at the beginning of the year in February. You can see that that's now held the rally back from the dip in the summer. We tried to break above it in September, but we couldn't hold, and we've just come straight back down again. So I'd say it's not quite as negative as the other markets that I'm looking at. Oops, what's going on there? That doesn't work, does it? There we go. That makes more sense. Again, it's possible this could be a slightly lopsided head and shoulders pattern. They don't have to be perfectly symmetrical. The 200-day moving average is definitely doing its job here so far for the mini Dow Jones. So that's going to be something we've got to watch. A break below that and this longer term trend line is going to be a potential trigger. This trend line back in February, I think we had that on the weekly chart as well. You can see that black line there is going to be very important indeed. It coincides with the 200-day moving average. It's a trend line that goes back to the beginning of the year, so it's important, it's significant. It marks the uptrend that we've been in since January, really. But again, we bottomed out at the beginning of October, and if we are building a right shoulder here, as I think we are, here we are, shunting that along a little bit, you can see that we probably should hold below this sort of 17,000 area on any rally. I think we will get the rally. I think we have got one last chance for a test of the upside before all hell breaks loose and we do collapse, but we'll have to see. October's going to be a big month. I mean, October is etched in many people's minds as the month of a potential collapse after 1929, 1987 and a few other events. And I just think we've got to be really careful here. So there's my warning. There was one other market which was worth looking at, the Nasdaq. Not so negative here. potential head and shoulders pattern, but it would be a bit lopsided, so I wouldn't pay too much attention to that. The only thing that does concern me is, actually I don't need to look at the weekly, I've got it on the daily. The only thing that concerns me is this trend line going back to April. Nice strong bull trend for the Nasdaq. We've broken it, so you can at least say that this 1, 2, 3, 4, 5, 6 month bull trend has been broken, and you can see how that trend line is just holding perfectly over the last few days on this bounce back from the first week of October. So that is still negative. The trend's been broken, and as long as we hold below that, we certainly got scope to go lower. So yeah, all in all, pretty negative picture for the US stock markets, I think, and I do think sooner or later we are going to start to collapse to the downside, and I'm worried it's going to be quite a big move. Dare I say the word crash? Yeah, it could be. It could be the beginning of a big move to the downside throughout next year. What we see through October and November could just be the start of it. Don't forget, markets don't tend to crash that quickly. They can take a year or more before they bottom out. It is worth looking at the European stock markets, because they look an awful lot worse, and I think they've got an awful lot more downside. They're probably just waiting for the US to break low. I think if anything, they're being held up by the US, even though they've been weak. So this is the DAX. This looks hideous. There's no other word for it. It looks hideous. Right, been in a lovely big uptrend. Couldn't get through 10,000. This weekly chart has formed a head and shoulders as far as I'm concerned. We haven't broken the neckline yet, of course, and you do need to break the neckline to confirm a head and shoulders pattern, but it's very, very clearly developing. You may have seen this already. It's so obvious. But you've got a left shoulder here, which formed in the first quarter of the year. Last month of last year and the first quarter of this year. You've then got the head pattern, which built up over the summer. This low held here at 89.03. We're looking at the DAX futures here, almost exactly at the March low, so that's very symmetrical. You've got this right shoulder here, which we topped out at 98.93. That's higher than the left shoulder. That was at 98.02. As I said in the S&P example, the right shoulder can peak above the left shoulder, no problem with that at all. But it's a very clear head and shoulders pattern. And it just looks horrible. If the US markets start to break lower, then that's going to break the neckline, and it's going to look really ugly. Can I see this any clearer on the daily chart? Well, possibly you can. You can see the neckline here anyway. The low in March. The low in August, and it's a bit of a double right left shoulder, if you like, head and then right shoulder. We could still bounce off here. We're very oversold on the daily chart now and on the short term. There's nothing to say we won't try a rally back up. We may even have another go at these 200 and 100-day moving averages. I tend to think that probably will happen. I just don't think we're ready to crack yet. These things tend to fake you around a bit, and just as you think it's ready to go, it has another blip up and squeezes out a few weak shorts, and these things are not easy to predict time-wise. But I wouldn't be surprised to see that. You can also see this 100-day moving average and 200-day moving average. The 100-day moving average is the blue line. It's not going to take too much more time. The blue line is starting to head lower now towards a 200-day moving average. Once that crosses over, they call that a dead cross. A lot of people take that to be very negative as well. Longer-term traders will probably have that in their sights, and they'll be looking for that cross. Maybe I can find out. I can show you when it crossed on the up. So you can see the 100-day moving average has been holding nicely above this 200-day moving average for a long time now. So if you were using that as an indication to stay in a bull trend, it would have done you nicely. Let's see. The last time we got a dead cross was in the DAX. Here you go. The last time we got a dead cross was around the end of August 2011. Well, we'd already started heading lower by that time, but you can see that was the last significant move to the downside. And again, that would be if we start to break below this neckline, actually, which is around the 88.90 area. I would imagine by then this 100-day moving average will be crossing below the 200-day moving average, and it'll just be yet another sell signal. I think you're getting the picture. I'm not at all comfortable with these stock markets. Euro stocks is another one that I chart, so I'll show it to you. I was slightly confused with this one. I couldn't figure out whether this was a double top or not. Actually, let me show you in the weekly chart. That's a bit clearer. On the weekly chart, that does look like a double top. I was slightly confused as to whether it was or not. 33.27 the first high, 33.08. I didn't know whether that was close enough to call it a double top. But what is very clear is this trend line here going back to June 2013, so getting on for 15, 16 months old or so. And you can see once we broke through that in July, in the summer, we got a nice bounce off in August, as we did with all stock markets, but we just couldn't get through this trend line. It really did do its job as resistance, so a little bit not like the Nasdaq. That longer term trend line has held the upside. We're heading lower again. It's just not a very positive picture. You do have what now does appear to be a double top pattern held by the trend line. It's all negative. I'm going to finish off with the FTSE because that doesn't look very good either. It's actually quite remarkable how low the VIX still is. I think it's around 15-16%. I'm surprised people aren't buying the living daylights out of puts at the moment. Weekly chart for FTSE. There you go. I'm going to widen that out a little bit. Okay, so this is a slightly more confusing picture. Actually, it's worth looking at the monthly chart. That's more clear. I haven't really drawn that trend line in. Well, on the monthly chart anyway, let's have a look. It could be argued that this is a triangle, I think, and we've certainly broken below the upward sloping part of this triangle, so it doesn't look too positive. We're breaking below trend lines, we're breaking below fib support here. We've got a big fib support down here, as you can see around the 6400 area. That's held nicely as it was supposed to do. We called a low on that last week on Thursday, so that was lovely. It bottomed out exactly where it was supposed to. Very simple reason why. You can see it's just a good fib support level. There was some other bits and bobs in there which helped reinforce the fact that it would probably hold, and it did. But ultimately, I think that will give way. You can see this 100-week moving average. It's the blue line here, trading around 6,500. Well, we'll see where we close on the week this week. But last week we tested it. We spiked through it. I think we closed pretty much bang on it, judging by the look of this candle. Let's open that up a little bit. But this is going to be another factor to keep an eye on, this 100-week moving average here. We start closing below that for a week or two, and that's going to add pressure. It's going to get people more worried. I don't think the daily chart really gives us any extra info, other than the fact that we've been in a bear trend for the last couple of weeks. Steep one, actually. Once that Scottish referendum was out of the way, that was it. This market plunged along with the DAX. The 100-day and 200-day moving averages are worth watching again. They're starting to get close. The 100-day moving average is dipping down towards the 200. As I said earlier in the DAX, that would be an extra sell signal if we happen to get it. You can see how... oops. You can see how when this bullish cross, whatever they call it, happened back in, let me see now, what was that, October 2012? We then took off once this, so people do pay a lot of attention to these crosses. I tend to think they're a bit late, and I don't really pay too much attention to them. My time span for trading is very short term, so these sort of dead crosses and golden crosses or whatever they're called, I don't pay too much attention to them, but a lot of people do, and it certainly would be an added sell signal, as I say. So watch for that break below 6,400 in the FTSE. I think that could put that market into free fall, and we could easily see 300 points off that quite quickly. Okay, I think I've banged on about stock markets enough. You get the picture. I'll have a look at gold. Okay, so gold's been in a big old bear trend. We have held, I'm sure you know this already, it's fairly well talked about gold, but of course, I'm actually looking at gold deck futures here, or the continuation chart for the futures. So Might be slightly different to the spot price if that's what you look at. But this is what I chart for my clients. You can see that trend line held perfectly. So that's the one to watch. This trend line, we had a low for the futures down at 1180 back in 2013. That was June of 2013. We bottomed out again at 1181 beginning of this year, first week of January in fact. So that's been retested, and so far we've bounced off it. We're oversold in the short term, so we are seeing a decent bounce back at the moment. It's holding at least. I don't think it will hold forever. I don't know when we'll break below it. This candle yesterday was pretty positive, but we're not really getting the follow through that you would hope after a big bullish candle like that today. So maybe that was just an initial reaction when we hit that important support level. It was an obvious support level. Anyone could see it with a chart. It was 2013 low, 2014 low with a big old trend line. And once we hit that, there was some nice short covering at least. So we've had a good rally back up. But yeah, I don't think it's going to last. I think sooner rather than later we're going to break that. And once we do, there'll be a lot of extra selling pressure to the downside. So watch that. Euro has been a big one, and I'll show you why we bounced. Okay. Again, if you get my reports, you'll know that I was talking about this big trend line here, and that was the last chance for the bulls to defend it. Well, they did. They did a good job of it. This trend line goes back to May 2011. This is why you've always got to look at your longer-term charts. And look how nicely we bounced off there. We were getting so oversold, I suppose. This was someone was looking for some support, I guess, to at least cover some shorts. That has worked quite nicely. It's a good trend line. Whether that's going to end the recent bear run, I can't be sure. I'm tempted to think it really could do. I would look for more reasons to buy it than that normally. I'd look for 2 or 3 good reasons to buy it. But anyway, I've got a feeling that's going to work. I've got a feeling we're going to rally off there. And there's another reason why as well. I was talking about another reason. Well, there is one other reason. Only a short-term reason. So not necessarily some huge bounce back. But if you look at this, this is the 4-hour chart. We could potentially be building an inverse head and shoulders here. Early days, but we'll know pretty quickly within the next couple of days. You can see that we're down, 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 down. Potential left shoulder, head, potential right shoulder. If this is an inverse head and shoulders pattern, then once we break above the neckline, we'll take off and we'll have a really decent recovery. Start of a bull trend? No, I don't necessarily think so, but certainly a decent recovery. And I'll be putting targets on my reports, of course, but you can probably work them out for yourself. But just be aware of that pattern. There are some indications in a lot of pairs, actually, that the dollar's just had its day for now. I don't think we're going to get any major trend reversals, but I do think that we may have seen the top for the dollar for a while, for a few weeks at least, and I'll show you some more reasons why. This is cable. Go back to the day chart. We've got a bullish candle yesterday again here in cable. The new low at 159.41. It was just 9 pips below previous day's low. I think it was Friday's low, and a good bounce back. So a fairly bullish candle, not really enough to want you to pile in to that on its own. Stochastics oversold, just starting to turn a little bit positive. So you would at least be thinking, okay, maybe not wise to be short anymore. But if I show you monthly chart, then there's more reason here to start feeling a bit more positive about cable. There you go. Hopefully you can see that. that black trend line there. We pierced it. What are we looking at? Monthly chart. We pierced it last month. In hang on, just let me get my bearings on this. Why is that saying October? September. Yeah, September we pierced it, but we managed to close above it. October we are just dipping below it, but of course on a monthly chart we're not below it yet. We haven't closed yet. It's only the early stages of the month. I've got a feeling we could close back above that. I'll just flick it onto the weekly chart. It's not very clear on there. There you go. So the question is, we've got 100-week and 200-week moving averages in quite close proximity. 160.88, 160.11. So 161, 160 double low, call it. It's all a question of where we close on the week. We're not that close to the end of the week yet, so we'll see how we go. But if we could close the week above that trend line, which according to this weekly chart is around the 161, 40, 50 area, then I think that could confirm something a bit more positive in cable. Not that convincing yet. We've just got to keep an eye on it. I do like that inverse potential head and shoulders pattern in the euro. So let's see if we get something more positive out of cable as well. Yen. This is also giving a little bit of an early indication of a potential short-term top for the dollar versus the yen. I see it's lower again today. Okay, so weekly chart doesn't tell us an awful lot. But the daily chart is starting to look less positive, shall we say. This big negative candle here on the 1st of October, we managed to push higher up to 10.08 at 110.08 and then collapsed, took out the previous day's positive price action, so that's quite negative. We did manage to hold good support at the 108 double low area. We bounced nicely off the first fib support, but the failure to retest up here, that's not very positive. We got this big red candle yesterday. It doesn't look good, so I think more than likely we're going to retest this 108 double low area, and a break below there would be more negative. I do think this is just a bit of profit taking on this pair. I think we will stick with the longer term positive trend, and I do think it's probably worth looking at the dollar index. Actually, I'll show you that. It does look pretty positive, but I think in the short term, maybe over the next week or two, we'll see a bit of a retracement here and a bit of dollar weakness. That's what I favour anyway. Canadian got walloped yesterday. So look at the weekly chart for the Canadian. So we've got a bit of a double top thing going on here. It's been a good rally over the last year and a half, but this is a very clear double top pattern. And actually, you'll have to take my word for it because I'm not going to. Well, actually, I'll show you. This is the monthly chart, and this goes back to. Hang on, I need to get 2009 on here. Where are we? Yep, 2009. If I throw some fibs on here, you'll see that the 50% line is around the 112.35.40 area. That perfectly capped when we had this first rally up here. I think that's pretty perfect. No, I'll have to widen this out, make it clearer. Sorry, squeezing that into the bottom of the chart doesn't look very good, does it? So that 50% line here at 112.35.40 area held perfectly. We had a little double top here. 112.24 was the high there. 112.78 was the high there. So all fairly easy. We got a little double top here, which sent us lower, but now we've got a bigger double top pattern going on, which I'll have to get onto a weekly chart to show you more clearly. Actually, while I'm on this, just want to see what this looks like. No, not particularly relevant. Not particularly relevant yet. Okay. I'm drifting off the subject, sorry. Okay, so yes, this 50% line here has been holding nicely. We've got a double top, most definitely. It looks quite clear. 112.78 previously, 112.69 this week, last week, this week, and we've taken a right old dive yesterday to back away from the potential double top pattern. So I think right now you've got to treat it as very likely that is a double top pattern, and that does look more serious than the dollar yen. Not something you want to be long. If you've been long of this dollar CAD all the way up, you've had a great run. But I think it's too dangerous to be longs now. You're really going to have to see a close above that double top pattern, at least on a daily basis, in order to feel confident about further moves to the upside. So yeah, I do think we're heading lower. Wouldn't be surprised to see it down around here, really. 109.40, 108.90 area. That would be an obvious one. I bet that ties in nicely with some fibs if you were just looking for some quick targets without going too deeply into the price action. There you go. It does work nicely. Look, the 200-day moving average comes in at around 109.40 area. That's also would be a 50% retracement of the rally up from the beginning of July. And of course, down here we've got the 61.8, which is just below the 100-day moving average. These look like reasonable targets for October. If we were to get that far, I think you'd want to be buying it again. I don't think it's going to go. I don't think it's going to absolutely collapse. I think eventually we will break that double top, but right now it's not worth being long dollar CAD. It looks far too risky to me. Any other pairs you'd like me to look at? How long have I got? About 15 minutes. I've actually started covering a lot more pairs, so I might as well just go through what I'm covering. Euro GBP, yeah, that's something I am starting to cover this month. So let's have a look at it. Okay, so I'm starting to cover it, but I haven't done so yet. Well, clearly, this is the weekly chart, and the obvious level to watch is 77.53. That's a 2012 low. We've bounced right off there this week. Oh yes, I did actually write a report on this last week, and drew attention to the fact that we were testing that 77.53. Last week's low 77.58. So that's held nicely. It does actually coincide fairly loosely with a longer term fib support area around the 77.90 area. And if we're back above there now, 77.90. So this actually looks okay. We're looking more positive after. It's a double bottom, really. Daily chart, not quite so positive. Let me just have a look at something. Hang on. That's actually a potential inverse head and shoulders pattern developing there. There's your neckline. So watch that. It looks like we're heading south again. Let's see how far down we go. If we hold out around the 78.20, 78.10 area, we could even go a little bit lower than that. Let's see where this dip bottoms out over the next day or two. See if we do get some sort of reversal pattern there. It's possible. I'm jumping the gun there. So right now, it does all depend on that on that double bottom low there. Let me just have a look. Yeah. Just trying to get some sense out of this. Hang on. Yeah, I don't think we're gonna get any reversal pattern there actually. Just watch that mid 77.5 area. I've got a feeling we're going to break that actually. Looking at this, it doesn't look too good to me. Anyway, if we do break 77.5, That's going to be a signal for us to go a lot lower. I wouldn't pay too much attention to a reversal pattern here. I don't think that's particularly relevant. No, let's forget that. Okay. Oh, you can see how we got so oversold. We were oversold for a couple of weeks, and it hasn't taken an awful lot to completely unwind that oversold situation now. Yeah, I don't think that looks positive at all. I think we're going to break that 77.5 level sooner or later. Okay, I'll do Euro Yen. I get asked for that a few times. It's another one I'm going to start writing reports on in a week or two. So it'll be a daily offering. Right now, that's the weekly chart. That really isn't telling me anything at all. The daily chart. I'm not going to waste time on this. It's not really telling me anything at all. Nothing that I can give you any constructive ideas for trades with. Let me fiddle about and see if I can. No, not really. Sometimes the chart just doesn't really say anything. And I don't think this is saying anything to me, unless you can make any sense of it. No. It's flogging a dead horse, that one. Aussie Yen's a better chart. Okay, brilliant. Let's have a look at that one. Good suggestion. Good suggestion. Hopefully that'll be a bit more interesting. I'm going to be charting this pair on it. I'm going to be doing daily reports on this pair as well. Starting another 10 markets soon. I must be mad. Okay, yeah, this is more interesting actually. That trend line's not really working anymore, is it? Kind of. I'll leave it on. Okay, well, there's not a lot going on here that I can go on really. It looks like the relevant part of this chart is actually just over the past year. So, but it is interesting. Yeah, it's had a really good run. We've broken this uptrend. It is holding, so it doesn't look very positive for the Aussie. We're going to get a bit of yen strength by the looks of things. Yeah, the question now is, can we hold 94.70? We're hovering just above that. A break below there, break below that fib support would be adding pressure on this pair. It doesn't look too positive to me. No. It does look more interesting, that's for sure. Yeah, I wouldn't really want to be long that one. If we were to get back up to the 96.10, 96.20 area, that looks like a decent chance to get short on this, actually. Low risk reward, you could have quite a tight stop on that. We might see that next week. A chance to get back up there and try a short, see if that trend line will hold, see if that Fibonacci resistance will hold. And you can see, actually, quite a lot going on around that 96.20. Yeah, lots of little highs around the 96.20, 96.30, even 96.40 area. So trying something in that 96.20, 96.30 area. If we got there, that would be a nice potential short below 96 area. If we get a chance, we might do. Daily chart. Well, we're hovering below the 100-day moving average, and that is really holding quite nicely. So that's good little resistance. 95.84 at the moment. We haven't really managed to get up through 96.00. over the past week or two, so who knows, maybe we won't get a chance to sell it back into the low 96 area. Maybe 9600 is as good as it gets, but I must admit, well, we're oversold. We could get a little push up. I do think that's probably a selling opportunity if we get it. I mean, you could argue that this is a bit of a head and shoulders pattern. If it were to, it would have to build up over a longer period of time. No, I wouldn't pay too much attention to that, actually. No. You can see how that could be a left shoulder building up over a couple of months. Nice head pattern. So if we spent the next month or so building a right shoulder, maybe getting up into the low 9600 area and then starting to head lower, you know, that's possible. I think it's too early to be looking at that now. We'll have to revisit it in the next webinar. If that was the case, then this would be the neckline. But no, I'm just speculating there. Okay, doesn't look too great though. Doesn't look too positive, I've got to say. I think we've got 5 minutes. We'll look at the dollar Swiss. I had a brief look at this last week. I haven't looked at it for about a week, so let's just see if there's anything worth taking note here. No, not really. We haven't gone anywhere for 2 years, so I'm not even going to waste my time on this one. You can see this goes back to 2012. So yeah, over the past 2 years we've gone nowhere. You can't make much of a trend out of that, can you? Again, seeing this a lot in some of these dollar pairs. This big red candle yesterday, right out of the blue, big blue candle, and a big red candle. So yeah, that doesn't look particularly good. We did make a new high, 96.90. We beat the previous day's high, which was 96.83. We beat it by 7 pips and then collapsed. So yeah, that doesn't look particularly positive. I think though that all that really indicates is how we're probably just running out of steam, and we're going to see a bit of a trickle off. But I don't think that's going to be the start of anything much more negative than that. We'll probably go a fair bit lower over the next few days, and we'll look for some buying opportunities on that. There's a nice example of a golden cross. Look how nicely that worked. We were talking about those earlier in the stock markets, or the reverse. We were talking about a dead cross. 28th of August, if you just traded on that alone, you'd have got a really nice run out of that one, wouldn't you? That's very, very nice. Okay, sometimes they are worth trading. I mean, they're a bit of a delayed indicator, of course. You would have only been jumping into the trend after it had been going up for 1, 2, 3, 3.5 months or something. But you certainly would have got the best move if you'd have traded off that moving average cross. Dollar index. I think I've got 3 minutes. I'm just going to have a look at that. That sums it all up, really, the dollar index. And this is why we may not really have too much more downside on the dollar. This is quite important for the dollar index. There's a lot of lines on here, so apologies if it looks slightly confusing. But you've got this big trend line going back to 2011. Boom. We had no trouble slicing through that on the way up. I wonder if that will act as decent support on the way down. That comes in around the 85.25 area. You can see I've got a longer term fib support around there as well. What is that? 85.30. Okay, so that's longer term fib resistance. Yeah, 78.6, that one. We've got this trend line here, which goes back to July 2012, just over 2 years long. So you can see there's quite a lot of support now that we've broken above there. We're just holding that trend line perfectly, actually, at the moment. That's quite interesting. Maybe we will continue a little bit lower and then get some buying opportunities. I mean, that would tie in with my theory on most of those pairs that I was looking at. But the real big one is... Let me see now. Right, I'm going to finish off with this monthly chart. There's a nice big trend line there. So if we were to dip 84.50, that is, so it's 150 pips lower. That looks like really nice support. We sliced through that like it really wasn't there, but you can see. Let's just open this up a little bit. Where's that high? 2005. Yeah. There you go. A bit clearer. Okay, that's a really nice trend line. It's worked really, really well, hasn't it? I can actually draw it again, just to be a little bit more accurate. This is going to be the key for the dollar index going forward. As I say, I think we do get a small pullback in the dollar. It looks to me like that is 84.62 at the moment. So anything down around the 84.5 area, if we were to come off 150 pips or something, you can see we've got this little support area with these yellow trend lines. So that may hold. Maybe that'll be it. Maybe this last couple of days is just a pullback for the dollar, and it'll just take off again from here. It's entirely possible. I got fooled once before on a dollar yen when I thought it had topped out. It just took off again, so I could be fooled again now. But if that does continue lower, then I think we're going to get a nice buying opportunity for the dollar index around the 84.60 area. That's what I would look at. Actually, that probably ties in quite nicely with this high for 2013. 84.75, yeah, I like it when these levels tie in a little bit and you get some confirmation from something else. So let's see if that gets down there, and if it is, I think that's probably it for the correction in the dollar, because I do think it's longer term going higher. I wrote an article on this, I don't know whether you read it, for a website, saying how this is probably only the beginning of the bull run, and it does look like this is just the beginning of the bull run for the dollar. Certainly does on that chart. Okay, I think I have to finish up now, do I? 12:45, 45 minutes, I think we're done. Unless anyone has got a quick request before, I can maybe slot something in before we finish. Otherwise, I'm covering 10 more pairs on my website, Euro Swiss. Let me do that for you. I'm covering 10 more pairs on the my website going forward. I'm covering more stock markets. So if you're interested in those reports, please have a look. EURCHF. I'm also going to mention this. I'm doing it. This is just a one-off. You may have seen it on Twitter. Just a one-off. I'm doing a session. Let me see now. Saturday week. It's Saturday morning. I'm going to show you how I do my thing with my charts. I'm just going to show you how I apply that to day trading strategies. It's basically a one day only. I'm never going to do it again. Where I'm going to show you what I do. So if you're interested in learning, you get a taste of it from me showing you through these charts. But if you really want to see how I break down a report, how I write my reports, and how I apply it in a practical way to day trades, then have a look at that link. I'm doing a deal for subscribers with a big discount, and if you mention the fact that you saw this on the FX Street webinar, I'll happily give you the same discount. Let me just see if I've got time to do Euro Swiss. Oh, thanks for recording it. Appreciate it very much. Thank you. Okay. I've got to finish up, but the Euro Swiss isn't telling me anything. All I would say is that is the trend line to watch. And you've also got the 100-day moving average, so it looks like we could just be topping out actually now. I think that's a decent bounce back in a gentle bear trend, so it doesn't look too positive to me. Okay, thanks very much. Appreciate you joining me today.